Hello, I'm Russell Poynton from Edison Group. Today, it's great to have back with us Darcy Willson-Rymer, the Chief Executive of Card Factory. Card Factory reported their interim results about 2 weeks ago. We're going to go through that and have a think about the outlook for the year. Welcome back, Darcy.
Thank you. Thanks for having me back.
In the first half results, there was overall good revenue growth, and you're demonstrating that typical half one, half two seasonality of the profits. Lots of moving parts within that amongst the businesses. So let's go through those businesses in order. So first of all, looking at the Card Factory stores, revenue growth slowed a bit versus what you reported through financial year 2025. There's lots of reasons why that was the case. In terms, the high street's been more challenging. But can you just talk about that? What's the external environment been like, and more importantly, how have you been able to offset that, because I think you're relatively pleased with how you performed in the first half?
Yeah, look, Russell, first of all, overall, we delivered growth of just shy of 6%, which we think in today's market is a really good performance. And if I think about our stores, which is obviously the lion's share of our business, our store sales growth grew by 3%. Half of that was off the back of like-for-like growth, and about half of that was new stores, as we opened 13 net new stores in the first half. But of course, we continue on our strategy of growing our card sales, and we continue to grow market share in card. But of course, we're disproportionately growing our other two primary categories of gifting and celebration essentials. And so overall, we continue to grow well. And if I look back over the last 3 years, we've grown like-for-like sales of nearly 15%. And we see the strategy in action, and we see that strategy continues to be the right one and continues to work. We did see a little variability, so we had very strong spring season, so Valentine's Day, Mother's Day, Father's Day. We saw a little bit of softness on the high street in the summer. But of course, as we look forward, so we're a couple of weeks away from Halloween, which is, and that's an emerging, growing season for us. And then, of course, we've got, Christmas to look forward to.
And within the division's, partnerships was the highest growth, right? But there's some contribution from the businesses you acquired there at the end of last year for the first time. So again, there are lots of businesses within the partnerships now. So what do you think are the key takeaways from the partnerships business in the first 6 months or so?
So really a couple of things. So first of all, in the businesses that we re-tendered and maintain those businesses, so thinking about Aldi and the Reject Shop in Australia, we have moved those business models, or in the middle of moving those business models, to what we call the full service model, where we control distribution to the stores and the merchandising on the shelves. So we know when we do the merchandising, then we have a better offer, sort of in front of the customer. So we've completed that with Aldi, and we're seeing good like-for-like growth in that estate. We're about halfway through that in TRSC in Australia. And again, the stores that we've done are showing really good growth. We'll probably pause that for Christmas and resume after. So that we're able to, we've won that business. We've been able to maintain it and then grow upon it. So I think that, that would be a key takeaway. And now, if I think about the US, which is clearly the area where, if our partnership business is going to be successful, then we need to crack the US. So we acquired the Garvin business last year. That is performing well. So that's exactly where we said it would be at this point. And then the intention is to take the full service rollout to the partner that we're testing with in America, and then we will build the card capability in the Garvin business probably by the end of next year. And therefore we have cards, gift wrap bags, so card celebration essentials. We've got our team that will be ready to go when the time is right for us to sign up new customers.
And moving on to online, there's been some interesting developments in recent months, obviously with the acquisition of Funky Pigeon. But the first half, the revenue slipped a bit, and you talked about this last time you came in terms of changing the offer, in terms of reducing the stock cards, that type of thing. So that's dragging revenue at the moment. Could you talk about what are the positives that you can probably pick out from the online performance?
Well, I think the most important thing is to focus on the strategy. But in terms of cardfactory.co.uk, we did what we said, is we have removed all of the stock products. So I've talked before about when cardfactory.co.uk was set up all those years ago. It was set up like a big store. So the majority of product that we were selling was product that we sell in our stores. And that's not the channel for which to do it. We clarified at the prelims, I think we talked about it here, for online, our strategy is to go after two missions. One is personalize a card, send it to your loved one with an attached gift. So what we call the direct to recipient with attached gift. And then the second part of the market is the extended celebrations. So this is, you want a themed birthday party. We want to create the environment online where you can go and curate that range and just say, it's a male, 8 years old, Spider-Man party, and we'll curate everything for you and send it to your local store to be collected, or we can send it to direct to your house. So we need to build that mission. So those are the two missions that we're going after. What Funky Pigeon allows us to do is to accelerate that strategy. So they're further on the journey of direct to recipient with attached gifts. And so, effectively, we acquired that business about 7 or 8 weeks ago now. Mm-hmm. We're in the middle of the separation and integration. Over the course of the next 12 or 18 months, we will deliver £5 million worth of synergies that we've identified. What that does is gives us a structurally profitable online platform from which to grow from, to go and grow primarily in those two missions.
That's good introduction to funkypigeon.com. So there's a lot of things to do over the next short while as you integrate the business. So could you just give some idea of what are the key milestones that we should watch out for over the next year or so? Yeah,
so clearly the first and foremost thing is the separation from old owners and integration into Card Factory. So we're well underway. As I've mentioned before, we've identified £5 million worth of synergies, and they are typically in fulfillment, product range, tech platform is the primary ways to do that. So we need to go through the process of making sure, getting ourselves onto one tech platform, streamlining our product range so we've got the kind of right offer, at the right value. And then from a fulfillment perspective, we now have 2 fulfillment centers, and it's about configuring that so that we're basically the lowest cost, to operate. So that's effectively what we'll be focusing on over the next sort of, 12, 18 months or so. That will then allow us to build on those 2 propositions, and basically grow and get our fair share of the online market.
On numerous occasions, we've talked about the seasonality of the profitability in the business, and a key part of that is the simplify and scale initiatives that are happening over many years. So could you just talk about what's been achieved in the first half and what we'll help drive profits in the second half of the year?
Yeah, so I think so simplify and scale is the program that we've basically put in place, that looks at over the long term. So it's a long-term program covering multiple years of how we drive productivity and how we drive efficiency, in the business. And because we're vertically integrated and we have the vertically integrated model, we have more levers at our disposal than perhaps others have. So it's how do we, what can we do in the design studio to drive efficiencies? What can we do in the factory? What can we do in the warehouses? And what can we do in the store? But what's the interplay between them? So with the factory, working with the designers to say, well, if the product is designed like this, I won't have to slow the machine down, or I can get more efficient use of board or more efficient use of foil, and being able to play the tunes, sort of all the way through. And we have this year over 20 million pounds of inflationary costs come into the business. 14 million of that is between national living wage and the national insurance. And the rest is sort of ordinary inflation. We've already offset about 9 million of that, and we will see our way for the rest of the year to offset the rest. And and everything that needs to be in place in order to do that is already in place. So bringing in the new till systems and sort of accelerating that gives us some efficiencies in store, but also gives us the platform to do more. We've done quite a bit in store to sort of optimize labor. We've done some stuff in the supply chain to drive efficiency and reduce cost. And and we've already got line of sight for next year to the majority of initiatives that will offset next year's inflation. So people should think of it more as a way of operating and a way of being, as opposed to something that is sort of time bound.
So Darcy, we're entering your key trading season now. So could you just talk about your enthusiasm and the outlook for the half year and the full year?
Yes. So we're now in the golden quarter, and I think the team is really excited. And we're as good in this setup as we can be, starting with Halloween, which is already mentioned, in a couple of weeks' time, and we are putting. We've allocated more space and more lines to Halloween this year. I think the range is fantastic. That's in store. So looking good in terms of Christmas preparations. We're excited about the range. So about 30% of the card is new, including a premium range that we put in. So we trialed that last year in about 250 stores. It sold really well. So we're putting it in all stores this year. So we're excited about that. On gifting, about 80% of newness, including a new range of Secret Santa. We'll see more mail gifting this year, where we've typically under-indexed. And then in Celebration Essentials, so in bags and wrap and party, about 90% of the products new in front of the customers. So we had all of our store managers together, Golden Quarter Conference a couple of weeks ago, where we took everybody through the detail of the Christmas plans, not just the products, but also the preparation and how the stock's going to come in and how we're going to lay out back rooms and all of the stuff needed. And our teams are genuinely excited about about what's to come, and we're as set up as well as we can be. All the stock that we need for Christmas is either in the store, in the warehouse, or physically on the water. So from a stock build perspective, we're probably ahead of by a couple of weeks of where we've been in prior years. So we're basically set, and I think we carry no more risk this golden quarter than we carry in every single year. The only thing we're mindful of is the budget and consumer confidence. But we also know that our customers tell us celebrating their special moments are really important. And so we're looking forward to a good Christmas.
Oh, great. Well, Darcy, thank you for coming in and talking about the first half results. And we'll look forward to hearing how the second half goes in the new year.
Thank you.